And I'm gonna go ahead and turn this video off. I don't need to see my face. Um, yep. So what's going on, y'all? How y'all been? Who been like making a lot of money? Who's been doing that? Nobody? Anybody? Anybody been doing a lot better, a lot worse? What's been going on with everybody?
Well, I've been doing better with making money, but I've been good. I've been giving it back.
Oh, okay. Yeah.
But I I am really I'm gonna get this down pat one day. You just don't know. Yeah, that is true. Consistency is getting better.
Yeah, I can see that. Like I trust you gonna do the right thing this tape.
I am.
And I already know you, Khalil. You pretty much there. You pretty much there, man. You've been working too hard. Switch this back over. Okay. So I dropped some charts in the group kind of already. So I'll pull those up and just explain them. These are just some overall like higher time frame views of what's been going on. So just to kind of understand what's happening, this is for the whole year from this high to this low right here. And we have a couple of points of interest that we traded through on the upside and finally got to one that actually caused some problems, right? Because every time we got to one, here's an order block, here's a gap that it just traded through right here. Here's another order block, it just traded through right here. Here's another one, it just traded through right here. And then it got to this one right here, and it tried to do a little something, but it kept pushing through it. And then we got to this little gap, and that's where it finally had a reaction from, right? So what does this mean? Does it mean that we ready to just start selling off? Or is this just a pause, right? And that's kind of the question that needs to be answered with all of the indices. If you look at US 30, we'll just open all of them up. And we look at NAS, right? Same thing going on. We didn't get any kind of reaction until we got into this gap right here. Now you can't see it on this because it's on the weekly. This is a weekly gap, right? But I did lay it's right here. This is the gap high right here. So it didn't do anything or have a real reaction because it got to this order block. It's traded through it. Same way. This is a gap on the weekly. It just traded through it. This is an order block. It just traded through it. This is another order block. It had one down day right here, but the rest, it just traded through it until it got to the gap high right here. and it finally had a reaction. And when you are seeing these things, right, um, you're going to want to keep this in place. And I'm going to do a quick review on seeing what the gaps are. And I'm going to do a quick review on order blocks because I don't, I just want to make sure y'all understand, how you can use it and what you're looking for in that, right? But if we do hold in this level right here, this is an order block right here now. So if we do hold on this, and this will be for the rest of the indices too, because it's an order block that got placed on each one of those. This was on US 30. This was on SPX. And this one's on NAS 100. And if this holds, then you can see we have price holding inside of a gap on this particular pair. We got price holding at an order block on this particular pair. And we got price holding at an order block on SPX and NAS 100. So all of these have a reason to hold this area and push up to the next point of interest, right? But at the same time, if it's ready to go to the downside, we know that also it's going to use this same thing to take us down lower into this area. That'll be the primary area it's looking at, right? You can see it on the fibs. You can see it using the PDs, the gaps. You can see it on all of them right here. So let me go ahead and pull that screen over here. And we'll look at the live charts real quick. But I just wanted to go over that first from what I had put in there already, so you'll know. Oh, and then also, let me talk about dollar too. Talk about dollar. We got dollar in a similar boat, but doing some different stuff, right? And we got to look at dollar because dollar, if you trade GU, EU, UCAD, anything with dollar in it, you need to know what the dollar doing so you can either trade with it or trade against it, because that's going to always be the case, right? So we really ever since this day right here, we've been ranging. We set the low, a new low right here, but we had equal lows inside of this little gap right here, this little volume gap right here that pretty much acted like a order block, right? Or it acted like a very strong support level, right, in this area. But if you look at the top, there's one here that did the same thing, that held us on the downside, right? So we had this order block, this volume gap right here, that's keeping us from pushing up any higher. And then we have this gap right here that's keeping us from going any lower. And we've been like that for several days, right? So that's kind of why we've been a little choppy. And all of the markets have really been kind of skewed, right? There's been a lot of confusion, and a lot of confusion for every market, like, even breaking retest has been a little issue, struggling, or smart money concept. They've also kind of struggled right now because it's manual interference in the market right now. And then it's also, conflict going on at the same time. So it's a lot of uncertainty. One thing I would want y'all to pay attention to is the VIX. And you can look up this VIX right here. I use the one from Vantage, this one right here. And I want y'all to pay attention to this because I've been doing some back testing. And let me get rid of this right quick. You'll notice that once we have a low or a high made in these, that's telling you like what the market is doing as far as how many people are trading. Well, this could be selling or buying, right? What I've seen is as we get above 30, as of late, we have huge days of trading, a lot of people coming into the market. Same thing when we have lows like around 18, we have a lot of trading in the market, right? This is this is like saying that a lot of people are leaving the market. This is saying a lot of people are coming into the market after we start pushing up or pushing down, right? These show our exits of the market or just a change in direction. It could be you'll be able to see like what actually is happening, whether it's new buyers coming in here or new sellers coming in here. Same thing, new buyers or new sellers coming in here, and that'll be dependent upon where like the market is moving. So on this day, this is the 8th. Look at like XPX on the 8th, March 8th. March 8th. This low was made, right? And in order to make a low like this, you need a lot of volume. You need a lot of people saying that our decision is for this not to go lower. So you need a lot of new buyers in to this area. And that's where all that dip buying happened, right? If we see this wick right here, March 15th, what does that day look like? March 15th. March 15th should be around here. Yep. So you see what happened on March 15th? We had a spike up here. So this implying that we have had a shift in sentiment, right? Where all this volume was taking us to the downside right here. Then we had this spike and new buyers come in right here. And then they come in right here. So this shifted us back to the upside. And from this day on the 15th, we haven't had a change in direction yet. And we haven't had an update in these candles to the upside to show new sellers to come into the market at all. If we look at the 16th of March, 16th of March was here. And on the 16th, we had new buyers come in. We needed new buyers to come in right here because we had a major area to break through, right? That's why if you look at it, let me just open it in the side view. Okay, so this is on the daily. So this 16th right here, we got this spike we had to have. The next update is this day, right? we come into a major area right here too. We had to have an update on the volume, on the volatility. And then down here, these two up candles right here are these two down candles right here. So you can see there's correlation, right? So just keep this, put it in your bag, and just know that this is something that you can use with the indices. You can use it with gold and stuff too. So, but like I was saying before, if we are gonna have this continue to the upside, we're already reacting like we should, right? So with this wick, this showing like, all right, somebody is willing to buy right here. Somebody is still like saying that they'll go ahead and buy it from this height. So somebody believes that we're going to either come after this yearly or into this liquidity pool over here, right around 47, right around 47.50. Now, don't know if this is going to prevail, but if we don't, remember what I sent in the group. Whereas we still could see, where is that? Oh, I don't have it. We still could see this trade below this area right here. And this will be, that's why I got the eyeballs here, because I want us to watch out for if we get to this level right around here, where this little low is over here. If we get to this low, then we got to come back down into these areas right here. And that'll be like the main thing that we're looking for pretty much the rest of this week. Pretty much going into this week. So let's look at what we got going on this week, so we'll know, kind of map out what we got going on. So Monday, we got some GBP news. We got factory orders. Nothing too big on Monday. Nothing too big on Monday. ISM numbers on Tuesday. Business health. So this could be a driver. I never traded ISM per se, like on an individual basis, but right now it's definitely one thing to consider. Trade balance news, that's definitely going to be some. I don't even know why this is a yellow folder. And we got FOMC speakers speaking, not Powell, but still got FOMC. He is out of, where is he out of? Where is this guy out of? Who does he represent? Um, where is he? Oops, that's what I did. I don't know which district she governs. I don't know which district she governs, but that'll be one to pay attention to on Tuesday. Then we got FOMC meeting minutes. Of course, that's going to be at 2, so it might be a choppy day on Wednesday. And we got oil inventories, unemployment claims. Bullard, I thought so. Bullard, I think is he all right? He in Missouri, St. Louis, so he's in the Midwest. There's certain speakers that we got to pay attention to. I can't remember the names exactly, but like the New York guy and the Atlanta guy usually can shift the market somewhat. The New York guy, I can't remember his name off the top of my head, but he's important because he's like directing Wall Street. So we got to check. We got to pay attention to him. And then on Friday, all we got is CAD major news. So we really should be looking for like breaking news next week. Not a lot of economic news that's going to be moving us. So we should be pretty technical and responding to anything that happened as far as breaking news, right? So this week, like I said, we need to see if this down move right here is legit, or are we going to hold at this level that we're looking at right now? And we got a couple things that could, if it want to respond technically speaking, it should go ahead and move to the lower side. But if we get some kind of crazy reactions to the market, to some of the economic events, or we have something happen within that Ukraine-Russia war, then we may have a change in sentiment. So for now, though, we just gonna have to kind of pay attention for the break and retest people. Let me open up this chart for the break and retest guys. You need to take this approach right here. I showed you guys this as a quick way to get your good zones, right? But like I said, I'm gonna just go do some reviewing today. So this will be the first review. So if you're gonna be doing like day trading, you can just use the daily, find the most recent high or low right here. That's your most recent high. And use this indicator, the higher high, higher low, higher high, higher low. That'll help you find your zones quickly, right? If you don't remember, it is higher high, higher low live by Lonesome the Blue. Right now it has 2,707 likes, and you'll know that because you can read more on it in details if you want to learn about what these mean. But that's your high. Go down to the 4-hour. Find the high or low on the 4-hour. That's the one you need to pay attention to right here. Go down to the 1-hour. That's your last high. That's your last low. That's your zone right there. That's your other zone right here. We're going to go to the 30-minute. That's your last low. This your last high. 15-minute. This isn't showing a low, but it is one. And we got to consider this one because this is a huge move down. So we could actually go into like the 5-minute and find zones on here, but we'll go ahead and take that one. And that's actually pretty much it. We can just kind of clean it up, make this the high right here. We probably can add this weekly as a level right here. There's your zone right there. You see that? That was done in like less than 10 minutes, right? You're going to sell here. You're going to buy here. If you want to buy early, you got this little area right here that you could probably buy from right here. There's your setup. You don't have to do nothing else, right? So, and then these red lines, those are your targets. If you want to clean it up a little more, you can go to the downside area and find some other targets. Like maybe you see this level right here, this down candle right here. That could be a target for you right there. Oops. That could be another target, and that'll pretty much get you all the way down either to this low or at least to this high. Anything else after that? What do we got? What do we got? In the 15-minute, this is a low right here. That's it. So your primary range to focus on if you trade and break and retest is this last candle here, this last down move right here, and then this last down move right here. And you got to get out of that before you can do anything else. So if you want this chart, let me send you the link for that. Let me see. Easy. About to break the neckline on that 15-minute head and shoulder. Breaking the neckline. Yeah, possibly. Yep. Yep. Let me drop this in the here too. Inside of here. Same, is this gonna look the same way on NAS? Same approach, real quick approach. And I'm kind of doing this for Miss Tate. I don't know if she know this or not, but I know that was one of the things I wanted to see if she can get done quick. But like here, there's your high. Really, we can do it quick here. This is the low. These are the main two areas right here, because on the 4-hour, this is a low right here. But so I'm gonna cheat a little bit just so I can hurry up and get through it. I already know too that this up candle right? This down candle right here is a level 2. I already know this is 2, so I'm just gonna be real quick and cheat off of this 4-hour and go ahead and add all this stuff real quick.
Correct. Correct. I thought you were doing this for me.
I know. I know it. I know you did. I know you knew.
Yeah, you do. I'm sorry.
It's okay. It's all right.
Mm-hmm.
Just so you can get quick,
Mm-hmm.
get quick. Go in here and knock this out in 5 minutes, right?
Mm-hmm.
Clean you up a little bit.
There's one thing Christine was saying that we need to learn how to, even though we can get money from other people's charts, like when Kim throw out the 10 charts on Sundays, we need to learn how to really mark up our own charts.
Mm-hmm. Mm-hmm.
And I don't mark them up. I just go back and I go back in time and look at. That's okay.
You gotta get this down pat.
Yeah, I do.
You gotta get this down pat. That's it. This is done already. So there's our buy. We weren't even done talking and I'm done with it.
You see?
That's our sell. And you pretty much gonna sell here. And your main goal is to get down to this level and gonna TP along the way. Your buy, you breaking along here. Main goal is to get up here. And you TPing along the way. There's some areas you can probably TP in between here that are a little smaller, right? Because you got the daily, monthly right there. So, and then this could probably be cleaned up more so here. And we could draw another level right around here. But for the most part, I'm gonna just make it. For the most part, that's pretty much it along the way.
Why does your screen say NSX USD?
It's just the particular company I'm using,
Oh,
the
okay.
broker.
So
So
that
I'm
is
using
NAS 100, right?
yeah, this NAS 100. I'm just using NAS 100 from forex.com
Oh, okay.
instead of Oanda.
Oh, okay.
That's all it is. Just a little bit. Okay. Easy peasy.
Mm-hmm.
Easy peasy. It is not hard mistake at all.
Okay, you say so.
It's not.
Well, it's definitely getting easier.
Hope so.
No, so.
Hope so. Same thing on US 30. It's the same approach. Just give that to you real quick. Starting from the daily, there's my high. I already know this will be a low right here. That's my low and my high. I don't need to worry about nothing else after that on this chart. Then I see this one significant low right here, but You can't see that it made a low on this chart because I'm on the 4 hour, but I already know that. And then I know this little push up right here. And then this little push down right here. That'll be my main levels to look at. On the 1 hour, pretty much got everything on the 1 hour too. But this, even though I'm seeing it on the 1 hour, it'll probably be a low on the 15-minute, but so I won't mark it for now because I want you to see it. So on the 30-minute, this low was made right here. That's that same low. So here, nothing. We can go ahead and get this little high right here. Right. And looking at this down candle, you can't see it on this chart, but probably on the 15-minute, we'll get a low right here. And on the 15-minute, we'll probably get a low right here. So this was once a low right here. It doesn't show it anymore, but it was once a low right here. So that's one low. That's a level right there. And then it's not even showing it on the 15-minute right here. But if we wanted to, we could mark up levels from the 5-minute, and there's a low too. And like this did such a huge move. So it kind of gave you some levels on the lower time frame that you probably wouldn't have recognized, right? And then same way over here, we don't have a lot of stuff in between this level right here, but this is a lot of pips right here. This is 152 pips, right? But if we look at this to this on the rest of the time frame, it's not really much to say that this is a level to consider, but we probably should because it's such a big range. So we can go ahead and account for this right here. But we don't actually see a low or a high made until we get to the 5-minute. That's the first time we see a low right there. So we'll go ahead and account for that on this time frame. And then for the most part, we got our range right here. We buy above here, we sell below here. And if we wanted to buy early, we can come in and buy it from right around this monthly level, because we know the monthly is an important level, right? So we got the setup on that. And you selling from here. You're buying from here. That easy. If you don't feel comfortable buying from here or price is already moved, you can buy from here. Because that's the actual break of this high right here. And you buy it until you get to here for sure. And you just target it along the way. If it keep going, then you know you back up into here. And then if it keeps buying above this, then you're going to take the same approach. You're going to come back to the daily. It's nothing in between here and here. All right, cool. Going to go to the 4 hour. No low or high in between here. Cool. Go to the 1 hour. No low or high in between here, but we got one right here. Right? So there's another target. Right? If we buy, there's another target. If we can get above this main low or high right here, this is the main one, right? If we can't get above this, this will be the next time we should have any stoppage right there. So I'm just going to leave the rest for you to figure out. Just like if we break below this, where's the next one, right? We're going to go to the daily. We can already see if we go below this, this will be the next area right here. If we go below that, it's not a high or a low, but this will be the next area, but we don't get any signal on the daily that that's the next one. So we're going to go to the 4-hour. Go to the 4-hour. These dots mean that this was considered a low at some point, right? And we know that because if we hide, let me hide these pivots. There's our higher low right here. So we know that this is an important level because we had a higher high or a higher low or a low or a high created right there. So we get our signal on the 4-hour that this level is one we need to consider. But this range is a huge range here to here. Is there anything in between here? So we're going to keep going down. We're going to go to the 1-hour and look in between here. Where's the higher low? We don't have one. We got one right here, but it's pretty much the same level as the one we got on the 4-hour. So we're not going to worry about it. But if we look in between here, we got a high that was made here and a high that was made here. We can probably consider those. Let's go to the 30-minute. Let's go to the 30-minute. Nothing changed pretty much. But since we didn't get any lows made in between here, we probably just should consider this high and this high. Those are the last highs or lows that were made inside of this area. So that's one. That's two. All right. Then the last thing we'll do is go to the 15-minute. Same approach. Come over here again. We have a high that was made right there that don't really give us nothing. Nothing significant in between. Well, maybe this one right here. This one right here. So that'll be pretty much giving us that whole sell if we get to that. And everything else should be pretty much laid out for you guys if you take a break and retest on this. So here is US 30. And I'm dropping them in the chart and in the chat. And some people, I don't know, I got a Facebook group too. And I've dropped it in there too. So however you got on, that's where I gave you on every one of them. So now I'm gonna clear this stuff off and we'll talk about smart money concepts. So that'll really give the rest of the guys that I know that's taking a smart money approach on this, it'll give you what you want to see. So from a smart money perspective, right? from a smart money perspective. So the order blocks, right? Just to reiterate what they are, um, you know, order blocks again, like they're large institutional orders, right? And to quickly kind of understand, large institutional orders, they are usually the last up move before you get a down move, the last down move before you get an up move. And once you see that that move has been made, your logic is to look for price to return to that and then expand from it in the opposite direction, right? So you have two types of order blocks. You have just a regular order block, and then you have a continuation block. A regular order block you'll see at a high or a low in an up move or a down move. And then a continuation block, you'll usually see those taking out some kind of low or taking out some kind of high. It'll be used at some point later on to typically create a level of support or resistance, right? So that's a quick way to explain something, and then I can show you even better, right? So an order block would be, in our case, it could be an up candle, a single up candle, or a single down candle, or a series of up candles and down candles, right? So in our case, the easiest one to see right now is this one right here. This is the last up move before we make this big down move, right? And with this order block right here, you want to consider where the candle opens, the meat of the candles, right? You can look at this low too, but primarily focus on the meat, right? And this last up move is going to have to be traded back to at some point, and a decision is going to be made at these particular areas, right? Whether it's going to trade through it or whether it's going to use that to reverse from, right? Just like over here at this low, in this case, our last up candle, down candle was these series of candles right here. These got some long wicks. So again, focus on the main body of these, and that's your order block. Once you get an area like this, you can start breaking it down by, I'll show you how to break an order block down, but you really just want to focus on, this is the last down move, right? The wick, you don't necessarily have to consider so much. You just want to get the meat, right? And this will be the bearish order block. This will be the bullish order block, right? And these are your normal order blocks right here. A continuation block looks like this right here. It's just a random huge down move that is in the middle of an up move, or it could be in the middle of a down move, right? That's just randomly looking like it's taking price to continue to the upside, just like this is a continuation block to the downside right here. It's just randomly pushing price further down, right? But when you see a continuation block like these two, these are typically going to be used at some point later on as a new support or resistance level. Right here, this will probably be used as a support level. That's why I say that this may continue up, because now we got a fresh order block, continuation block to be more specific, right here at this level, which explains us why we got this wick right here, right? Just like this is a continuation block, which explains why we got this wick right here to continue to this point, right? Now, whether or not this is going to hold over here is the question, right? So Once you recognize your order blocks, right? Your next thing is to focus on 3 particular levels inside of that order block. That's why I got these. I have different fibs, right? I have the default fibs. This FVG is for fair value gap. This is something that we don't even need to worry about. Order block fibs and my entry fibs right here, right? But the order block fibs, I use these because these are the levels inside of the order block that I need to focus on, right? The low, the medium, the middle, and the high. That's going to give you your price levels to consider. Let me switch this so you can see the levels right quick. Right? These are the levels that you need to focus on, right? And what since we are looking at a bearish order block, your goal when you're looking for setups based off of this is do nothing at all until you see price come to this number, and this number. Nothing at all. If you see price shooting up, is going to that, you don't touch the chart until you see I get a reaction from price on a lower time frame at this level. So if we were looking to get a sell off of this order block, right, which technically we did, right, it just didn't keep going, right? So we would come to the 4 hour. And let me go back here. So that's our low. Actually, let me just stretch it out. Stretch it out. Okay. So as we know we got this accounted for on the daily, right? And when you have a large order block like this, you can also break it up as well, because now you see that on the daily, this is a huge order block. But if we look at this single candle right here, we can also consider this as another order block too, which we don't see on this time frame. But if we go to the 4 hour, there will likely be one inside of here. And what happens is they will stack them up all in one area, right? Because it's not just one order being placed, it's just huge chunks of orders placed at this particular area, right? And they have to be distributed throughout, right? So if we go to the lower time frame at 44.91, we should see some down movement, right? 44.91 is right here, right? On the 4 hour. And we are operating now at this area. We operating now inside of this area between 44.91 and 45.87. We're operating inside of a bearish order block for this whole price movement. And at any given time, because we're operating inside of this, we know this is probably an area we could see a sell from, right? So here's the first sign that we could likely see a sell, right? We get to 44.91, right? And on the lower time frame, we can come in here and we can see this move right here. It gets from 44.91, we get our first move to the downside right here and right here. Before that, we don't have nothing happening to the downside. We had this little move, but look what happened right here. This is a 4-hour order block right here. It tries to, every time you see this, it's trying to sell off right here, tried to sell off right here. Here's another order block on the 4-hour, high to low. Right? It traded through this one, right? And essentially it placed another one. So there's a bearish order block, there's a bullish order block. It uses that to go up higher, right? And it's going to keep repeating this same process, right? Where you see a bearish order block, you're going to see a bullish order block. Where you see a bullish order block, you're going to see a bearish order block. If you don't see one of those, you're going to see a price gap. And that's going to be your bullish engulfing candles or your wick rejections, right? So in this particular case, we traded all the way through this daily order block, all the way through it, right? This is the daily order block from here to here. And then we had a significant move down here, which was here, right here. Once it got to the middle of the order block, we tried to sell off right here at 45.39. And then when we got to the high of the order block, we pierced it, we came up out of it, but essentially we traded back down into it, right? And that was the first real sale that we got, right? It broke it, but it came back down into it, right? And what you'll notice too is once we traded back into it, we went from the high of it to the middle. And that's where we got this big wick right here. Then the next move we had was from the middle, right? And we basically tried to sell down to the bottom of this. So now inside of this order block is acting as a support. These levels act as support and resistance levels right here. 87, 39, and eventually, if we get down to it, 91 should be the next time we see some kind of up or a major down move, right? Look at where this wick is right here. Notice where this wick is. This particular wick right here. This wick, this candle, this strong bearish candle pushed us down. And then we had a break and retest at 45.87. This is not a coincidence. This is the high of this order block from off the daily that this has made this significant move to. And then eventually from this high, it went straight to the middle and then it held, right? Straight to the middle and held, right? If we go to the lower time frames, let's go to the 1 hour. Let's go to the 1 hour, right? You can see it even cleaner, right? Broken retest. This move down right here, this wick rejection happened right at the high of the order block. So after price broke above this, it tried to come back and use the bullish order block, the bearish order block as a level of support and tried to push up from here, but we couldn't get it to happen right here and right here. That's where your wicks are because of this particular price level right here. That's why you have this wick right there because of 45.87. Same reason why you have this heavy down movement and it automatically stops right here at 45.39. You got two significant levels. You have the weekly price, the weekly opening price, and you have the middle of a bearish order block. Two significant areas as to where price stopped and why it stopped right there, right? So if we break and close above this 45.39, our logical area for it to come to is 45.87, because we know that it's trying to use this as a level of resistance. So you're saying, so what's up? What's up, Mimi? So you got a question. So you're saying for a buy order blocks, you can take sales in the same area? Yes and no. Yeah, kind of explain that question a little bit more. I don't know if you heard me, but just let me know. Can you explain that a little more? I just want to make sure I understand what you're saying. Turn on your microphone.
Oh, okay. On the daily, how you was just showing the bearish or the bullish order block, and then on the other side you showed I guess a bearish. So it was like a buy, and then on the other side you was showing a sell. So that's why I was asking, but you were saying you wouldn't take the sell until it got back to those levels on that.
To those levels. Buy. Yep. So in this case, right, this is the bearish. And let me just, this is the bearish right here. This the bullish. Oops. It's the bullish one right here. And if I'm looking to take a setup off this, this is a daily, so this would be a little different. This would be a little different though, right? Because it's a daily setup, so this might take a little while, but you know, you can take this same approach and look at this on the lower time frames. You can look at this on a 1 minute, 5 minute, 5 second, 1 second chart and take the same approach, right? But just showing it on a daily because it's cleaner. So this is our order block. These are the 3 levels inside of the order block that we need to pay attention to. This is our order block. This is a bearish order block. So if we seeing price at this, we should expect some kind of sell-off. If we seeing price over here, we should expect some kind of buy up from here, right? And we need to focus on these 3 levels inside of that order block. And here's another tip. Looking at order blocks. We're looking at this on the daily. These 2 on the daily. As we go to the lower time frames, we will see smaller order blocks at these levels. So on the 4 hour, we might see one here, or here, or here. On the 1 hour, we might see one here, or here, or here. And that is how you can like refine your entries. So if you want to like use a buy stop, sell stop, buy limit, sell limit, you can go to the smaller time frames and use those to set the buy limits, sell limits, buy stops, sell stops, or set your alarms. So if price get to those levels, all right, cool. I know that it's at an order block. Price finally made a rejection at this point. Now I'm gonna take the entry, right? That'll give you those huge risk reward trades, right? Because even if you, and again, the reason why I like trading like this is because if I'm wrong, I know that I'm at a point where the stop loss should not have to be that big. If I'm right, I know that I can get at least 3 to 1, 2 to 1, 4 to 1 setups off of this kind of trade, right? So I know that, you know, that I'm looking at something like, imagine if I'm taking a trade off of this order block right here. that was made right here. My initial stop loss, you know, let's say I put it down at the low. My stop loss, we say it's above the high. Now, this is exaggeration, right? Because I already know this is a daily chart, but in retrospect, right, I would have been looking for an entry here. My price target would have been here. This 3-to-1 right here. This is a 3-to-1 setup on the daily, right? And even if I don't get the whole 3-to-1 and I'm just coming down here, that's still almost pretty much 3-to-1, right? But essentially, the trade ended up only giving me an entry here. And this actually ended up being 11-to-1 setup altogether. Risk reward is super high on this setup. Super, super high, right? Same thing over here. Let's look at this one right here. Where's the last up one? So here's one. I like this one because it failed, right? This one failed. But even though it failed, okay, here's your order block right here. Here is your order block right here, right? This candle right here. And even though this one failed, if we had taken a trade from here, right, we still would end up getting, let's see, our goal would have probably been to trade back to this candle right here. But out of this trade, we would have still could have got this a 2-to-1 setup right here. But this is also almost 1,000 pips right here too. So even though we're wrong, we would have had the opportunity to close out these trades with high risk reward ratio. So that's kind of the logic behind that and why you want to look for this, right? And if we go to the lower time frames, you can get a better entry, refine it, you know, and kind of like make it a little cleaner setup so that you don't have to worry about being in so much drawdown. Instead, like I said, you can put alerts at these levels right here and just look for a rejection at these particular levels. And then you can use those particular levels as your potential entry areas to trade from, right? So if I had an alert at 44.91 for a daily order block, right? Once we finally got to 44.91, which was at this price level right here, 44.91. This is the first time price came back to this daily order block. Now, here's how you're gonna focus on this, right? I'm gonna just go ahead and mark each one of these so we know. Here's how you would consider this, right? Now, I'm not just gonna take a trade just because it comes to the level, right? I'm not just gonna take the sell because it came to it right here. What I'm looking for is wick rejection. Once I'm inside of this area, right, where do I finally get some kind of wick rejection? Or where do I get some kind of candle, some kind of down candle that takes a low out? I don't get it until I get to this area right here. Right? I start to get it right here. You could have tried to sell right here, which wouldn't have been a bad trade because now the same approach that we took on the higher time frame, you could take on the lower time frame because now we on the 1 hour, right? So we can dice this up the same way, right? Where's your hourly order block, right? is this up move right here. Now, you can take this right here and you can use these levels, 18, 13, and 9, right? You can essentially let this low happen and let price come out of this area. Or you could be a kind of aggressive like with this, because another way you can approach this, which I'll show you guys later, is you can use this candle to set up your entry off of it with stop, with risk rewards and everything. But I'll show you that a little later. But this will be your main thing that you're looking for, or you can just consider it like a break and retest, right? Break and retest at these levels based off of this move on this, or you can go to the lower time frame at that same area. Where we at? Here's the lower time frame. Same area right here. Smaller order block right here. Here's the same situation, and then you got this whole move down. Your stop loss on a trade like this, you got it. If you want to take it from the high, you know that you can use this old high that was made right here as your stop loss first level. Or if you want to be more conservative, you can start looking for entries here, stop loss right here, or stop loss right here, or entry right here, stop loss up here. But by the time you see these entries happen, you already up several pips. So you already know, all right, cool. I'm at this level, and this level. I have more than enough time to get some money out of this trade, out of any one of those entries, any one of them, before we got any return to price, which return to price, our entry don't happen to over here. But by the time we get a return, we've already made this huge move down to the downside already. And we don't have to worry about our trade no more. We can just take that and run with it, right? Go back to the 1 hour one more time. Another area we'll see is if we don't feel great about taking this, and which I can understand why you wouldn't feel great about this entry, because if price came inside of here and it's pushing up, you kind of would be expecting it to go ahead and hit the middle, and it stopped just shy of it. So a situation like that, I can understand, but this gave you confirmation that this may sell off right here. But the next thing I want you to focus on is this situation that happened right here. This is a continuation order block, right? And look at where it's happening. Price trades all the way down to here, from this high to this area right here. And it trade below this 44.91 area. At this 44.91 area, this continuation block is placed right here at this little order block right here. Same area right here. This one right here is matching this one right here. At this point, they needed to go a little lower. So it's not a coincidence that this continuation block is at 44.91 area, because at 44.91 area, there was a decision that was made that this needed to go just a little lower, and we bought from here. Same approach. Here's another order block right over here on the 1 hour. This is a bigger order block on like the 4 hour or something like that right here. But this is the main thing we need to focus on, this down candle right here. Because this is the largest candle in this series of movements. So this is really our order block right here. Right? And if we dice that up, we know this is our order block because this is the main down candle. Once price come down to these levels, this is where you focus, right? Here's the high, 44.69, 44.53, 44.37, right? Price pushes down all the way down to this point. Where do we get our wick near? Right before we get to 44.69, we get a wick at 44.70.8, right? We get another wick right here, 44.62, right? Which is pretty much only a couple points higher than this, right? Lower than this, right? Then as we get inside of this order block, where is the next significant pause in price? We are oversold right here. What's the price point we looking for at this point? 44.53.4. What's the low on this candle? 44.50.5. This is not a coincidence that this happened, right? It's not a coincidence, right? Because it's responding to the middle of this order block. Spot on, right? Spot on. It's no coincidence, right? Then after we respond to this and we say, okay, cool, we want to actually go up. If you don't get in right here, you focus in on this level again, right? 44.69. Where is this area right here focusing on? Where is most of the price levels happening, right? Right around 44.69. We get another wick right here to keep us going at 44.61. And then we just shoot up, right? We break back inside of this order block. This is another order block right here, but it's to the upside, right? Draw him out. Order block to the upside. Zoom in. If we zooming in, right? You see, this is our high of our order block. We would have missed the entry on this. This low on this candle is 44.98.6. The order block high is 44.98.5. Almost once, it's not even a whole pip that we would have missed the entry right here. If you by chance use the high of this candle right here, you would have been able to get in with an entry that would have only gave you 2 pips of drawdown for something that went all the way from 44.99 to 46.35. And you wouldn't have had to get out of this trade until like yesterday. Or not yesterday, but Sunday. It's Friday, I'm sorry. Then as you see the price continue to go up, you watching this. This is all trash, really, you know, consolidation, right? But you paying attention to this candle, right? You paying attention to this candle right here. It's a bullish order block. Bullish order block near the middle of the daily order block, right? This whole red, every red line is the levels in the daily order block, right? At the middle, on the 1 hour time frame, we have a bullish order block that was placed. Notice this wick, and this wick, this candle, these candles, right? 45.37, 45.22, 45.06, right? The wick, the low, the higher low that was made here and the low that was made here is, this low is 45.19. This low, 45.15. Isn't this just a few pips away from 45.22? Yes or yes? Yep. Nobody got an answer, but yes, that's correct, right? That's your entry right here, right near the middle of this 1 hour order block. We'll keep going up, right? You can even pull this out. You can pull this out to where price is now. Right? Because look at where price reacted. 45.37 right here, 0.6. Look at where this is. Middle of the order block on the daily, high of the 1 hour order block right here, low made right here. 45.37 is the point. The low is made at 45.34, right? The next time we get a pause around 45.22. It keeps going low, but look at where it stopped. The low is 45.07 on the order block low. The low on this candle is 45.09, missed it by 20 pips, right? Then as it pushed up, it tried to just go straight out of it, but then it came back down on this candle. Where did it pause? At the middle. The low on this, the number we need to focus on is 45.22.4. The low on the candle is 45.21.4. Literally, that's 10 points or 1 pip. Or I said that backwards, right? And we move up middle to high to outside and retest of the middle to keep going up, right? So that kind of shows you like how it's using these levels, right? Now, everybody got it, right? Everybody got it.
Everybody
Yes,
got
sir.
it.
Okay. Question, can you take entries from the daily order block? Absolutely can. But you if you're going to take entries using the daily and the daily only, you have to understand that you're going to be in some drawdown because you see how big these ranges are, right? 45.87, 45.39, and 45.91. Those are some big ranges, right? So if you only using the daily, then you just know you're going to have to be in a little drawdown. And maybe you want to just use small lot sizes because that means you can sit in it, you know. But that's why, that's why I showed you how to break it down from the daily to the lower time frames, because at these levels, these daily levels right here, there's going to be lower time frame order blocks that you can use to get a better entry. And now you can lower your risk, which means that you can increase your lot size. So just like these are the daily levels, there's your 1 hour order block right here. If I wanted to take a buy from these levels, right, I can use a higher risk here, here, and here, because I'm getting rejection at these levels. And I know I can take my setup from here. If I'm taking a setup from the high of this 1 hour order block, that would have looked like something like this. High, the entries at the high right here. If I took an entry from here, I could have made money from here to here, right? With my stop loss being the low of the order block. If I took an entry off the middle, now I'm saying that at the middle, I want to trade up as far as I can go. So I would have probably been looking to say, hey, I'm gonna trade to the high of the order block, at least the high of the order block right here from the daily. That's gonna be my main target. My stop loss is the low of the order block, right? This would have been almost 2-to-1. This one would have been 4-to-1. Then at worst case, which I don't really like to take, but I will, is the low of the order block. But in this case, if I'm taking it at the low of the order block, I'm using just like the most recent wick rejection, like here or here as my stop loss. And I'm still, because I'm inside of this daily, I'm still looking to take it to the high of that. Or if I'm taking it from down here at the low, I'm at least taking money here and here, because I know I'm reaching the middle of this order block and the highs in the middle of the daily. I mean, the 1 hour order block right here. If I take this trade, you also have to understand that if it don't go from here, if it doesn't go from here, then it's probably not ready to go. And it's probably giving you a setup to go to the opposite direction, like this one. If you had been taking a trade from here, we would have got this number of pips right here from this low to this high, but we actually got set up for the sell to continue down here and at this high, at this lower high right here. There's some other techniques I could show you that'll get you this entry right here, but like, that's just something for later, right? I have to learn to find order blocks in lower time frame. It's the same way. It's the same exact way. If you had got this one, we would have got, a really good move off the middle right here to here. And then, that would have gave us a lot to trade from. And okay, so now I'm gonna show you the gaps, how to use the gaps, and then that'll be it. So we'll start at the daily, right? And with the gaps, fair value gaps and finding imbalance, right? You want to look for bullish engulfing candles. And then you want to focus on the candle before and then the candle afterwards, right? That's where you have an imbalance in price, right? Where there's only price being offered in one direction, right? And what I mean by that is this is a gap right here, this area right here. And we got this down candle with the wick right here, engulfing candle, followed by a down candle with a wick right here. Doesn't matter, but this three candles. It's going to be a series of 3 candles, right? And it doesn't matter whether this is a bullish or a bearish candle. You just want to see a wick engulfing another wick. That's a bearish, right? A bullish looks the same way, just in the opposite direction, right? We see this up candle with the wick. We see an engulfing candle. We see a down candle with the wick. This whole area right here is your area of price imbalance right here. That means between this point, there's no selling being offered between here and here. There's no buying being offered between here and here. These orders in between here and in between here have to be mitigated, meaning that they have to be balanced in these areas. That's where the concept of price imbalance come from. These orders have to eventually get closed out, and over here as well, right? So just like I showed you with the order blocks, you're going to take these levels and extend them out. There's 3 levels inside of here. There's the imbalance high, there's an imbalance low. In between, there's 3 levels. There's, in our case over here, is 44, 44, 46, 48.3, 46.30, 46.12 too. Same way over here, 3 levels over here. $43.26, $42.97, $42.68, right? Now, this is on the daily time frame. I can take my charts, go to the lower time frame, look at how this worked, right? I've been going up and up and up and up and up all this time until I got to the low of this gap, the middle of this gap, and then I sell off. It's not a coincidence, right? It's not a coincidence. These orders from way back when, from over here, this area are being closed out, right? There was a sale, there were sales that took place over here, and we were selling, right? And then once we came back up here, hey, these got closed out, right? Because a matching order from this area, an order that was entered in this area was matched with another order in this area over here. And then we had this sell-off, right? That's essentially what's happening. So for us to get major wicks and major rejection at this area, at these kind of areas, makes sense for us to have a long wick right here and long wicks right here to the upside because of this price point. This level right here, we're gonna mark these again. High, middle, low. High, middle, and low, right? Once we see at these particular areas, we get to the price point, right? You can set your alerts at these levels, right? Or you can set your pending orders at these levels, however you want to do it. And you can say, all right, this is daily levels. I'm getting my entries from the 15. So at the 15-minute chart, once I see price get to these levels, right? This was yesterday. Oh, I mean, not yesterday, but Thursday, Friday. Look at what we got right here. Super rejection, super hard rejection right here. We almost missed it by a couple pips, but look at where we got this hard rejection from right here. Then we did some stuff and came around and did some other stuff. But then once we got back to the middle, 1, 2, 3, and pretty much 4 times right around here, we got super hard rejections, right? Super, super hard rejections at this particular level. And then we got huge sell-off over here, right? Now, it's a couple ways you can approach the entry. But this is where you want your alerts at, because at this level, now you're just looking for, I'm gonna wait for a certain price. I'm gonna wait for certain things to happen with the candlesticks, right? But either way it goes, here's your trade now. You already know I can at least go from here to, let's just say, here, you know? Let's just say here, that's the last body, right? You would have had entries over here. Your stop loss could be the highest high. Over here, your one entry could have been here, another entry could have been here. Maybe because you see this evening star, you could have got another entry right here, and that takes you down to here with minimal drawdown, right? Minimal drawdown. Your initial trade would have been 7-1, but you really would have ended up with really would have ended up with 19-1, almost 20-1 risk reward, because it never went higher than this 46.32 on any of these wicks right here. And you would have just been taking partials along the way, right? And like I said, it's the same way that we look at the order blocks, right? We got our 3 levels, and we're waiting for price to respond to these 3 levels. So my main trade, you know, hey, if price rejected right in here, look at what happened up here. Look at what happened over here. This whole sale that happened, that initially took us down earlier in the year in January, here's our imbalance. That's the wick before, that's the engulfing candle, that's the wick on the opposite side. We look at these areas, right? That's the high, that's the middle, that's the low, right? And now we would focus on these 3 price points: 47.76, 47.52, and 47.23, right? And we also got an order block right here. So we got a dual confirmation right here. So even if we don't reject at one of these levels, then we can dice up this order block right here and take the same approach with the 3 levels inside of here, right? But it never came up to that, right? So if we looking at this, once price take it out, we would have had an entry right here, here, or right around the middle. And if we had a taken this approach over here near the middle, stomach growling. Here's our wick rejection. The wick on this candle is 47.50 flat. The wick on this candle is 46 flat. The middle of it is 47.52. We only missed that again by a couple of pips, about 20 to 30 pips on each one of those, right? But we got wick rejections pretty much right around that area on both of these moves, right? And if we were to go down to the lower time frame, in this candle and this candle, we would have seen that we would have got setups that we could have took based off of these, based off of this in those areas, right? So this is something I think you guys should back test and make sure you learn if you want to do trade smart money, because that's how I trade. And one of my favorite setups is if I see a order block and a gap at the same time, like right around each other, because those give you multiple confirmation. I try not to disturb presentation and home questions at the end, but my questions are building up. Yeah, I mean, don't feel like you can't ask, brother man.
Corey, quick question. I think you mentioned this before. Is it better to, when you're drawing up your order block, is it better to look at it from wick to wick, body to body, or both? Or could it
I would say body to body.
Okay.
Because that's where most of the price has happened. The
Right,
wick
okay.
is thin, like it's thinly traded in that area. But like just like this one down here, like could I count this wick? And I would have been looking from here all the way down to here. I could, but it makes more sense to focus on these three bodies because they pretty much make up the candle right here. And here's another trick, right? If I'm seeing something like this this is the daily time frame, this is giving me this ugly series, right? But if I go to this is the daily, let me go to the weekly, right? You see this? This look way better. This look way better. So now I can either use this body or I can use this single candle right here and get the order block right here. And then come back to the daily. This pretty much gave me like where the order block should be. I can clean it up a little bit as well. So from a weekly perspective, I'm looking at this area. From a daily perspective, I'm looking at this area. And I would have pretty much got the same area, but with a cleaner looking candle. But for me, I would probably just look at probably this one right here. These two right here. I wouldn't even consider this one, but you could. And the only reason why I wouldn't add this one in is because this wick right here is telling like this is where the last bit of the selling started. That's kind of why I would use that candle. Like I wouldn't use this one so much just because I know I had this wick rejection. So for me, the order block is here at this high, this open to here. And then after that, I would just break it down like I did before, come into the lower time frame. Are my order blocks, and then I get my setup off of that since this is on the daily. But in this move, we didn't have a lot of up movement and down movement. This just kind of just ran right here. So this ain't a real good example.
Hey, brother Corey.
What's up, man?
He's bro. How you feeling?
Feeling good, bro.
Good. Yeah. Question: how do you look at the relationship between your fair value gaps? I'm trying to put all my questions into one in my head where they make sense, but in a way that it makes sense to you when I ask it as well. How do you look at the relationship between your fair value gaps and your return to order blocks, as you just showed, like you were saying earlier, don't touch the chart when you're seeing it, come up, but just wait till it get to that area. As you know, that's what I'm calling the return to the order block. So where you find a fair value gap in that area of the return to that order block, and then how do you place your entry fibs? Because I noticed, like in doing this, you were showing, where price tends to come to at 50% of the fair value gap and or the 50% of the order block. But then where are you placing your entry fib in reference to price coming back and hitting that 70%, which
Okay.
it tends to hit so regularly. And the reason I'm asking is because I'm trying to see how can you, or is there a way, and you can maybe answer this while we're talking about it, is there a way that you can kind of tell with better accuracy which one of those order blocks is going to be respected, or am I thinking about it too seriously because they all
No, it's you have to use price action to decide which one is going to be respected. Like there's no like confirmation other than price action to say which one. You just have to so just using this hold down move right here and then this up move, right? This blew through a lot of stuff. This blew through a lot of stuff, right? There's one right here. This is a bearish order block right here. There's another one right here. This all on the daily, right?
Right.
And it blew straight through all three of these right here with no problem. Like it wasn't nothing, And us blowing through those, right? Let me just point those out. This one, and then this one. Just blew through those, right? And you don't know, all you thinking at these three levels is this is where price should reject if it's going to stay bearish, right?
Yes. Yeah.
This is where price should reject. This is the next time. If it's going to stay bearish, this is where price should reject, right?
Right.
At each one of these points, right? Because there's a bearish order block, there's a bearish order block, there's a bearish order block. In retrospect, right? This is where price should buy if it's going to buy, right? Let's change the color over here. If it's going to buy, this is the bullish order block. We don't have nothing else in between here that says where it should buy. We got this order block. We got this gap right here. It could buy at that area. But the next time, we don't have anything until we get to right here.
Right. I see that.
At this point, right? So if I'm going to look at this move, right? High to low, right? Let's throw some entry fibs on there, right? I know I'm bearish, right? Overall, I'm bearish, right?
Right.
Now, let's look at our entry areas. Where is this at? This near the 78. Where is this at? This near the 70. Where is this at? This near 618 and 50%. We got a 70% sell-off entry right here based off of the daily. right?
Right.
So in a broader scheme, if we broke this all down, we would have had a smooth 70% entry right here, where this was at, right?
Right.
From a daily perspective, right?
Mm-hmm.
And we would have also noticed we tried to get a smooth 50% entry right here. It didn't work. But in order for us to get to the higher levels, we had to put an order block right here. Right. And now we trying to figure out, is this going to hold or not? Right.
Mm-hmm.
To say whether this keeps going up higher and maybe hit the 786. But if it hit the 786, what did we got right here?
Right. That's what I'm looking at. That's what I'm wondering. Like, like with this example, and we got the 70% there. Like, and you got a great reaction from the 70%. But if you were looking at it to come to that higher order block, that higher daily order block, right up here, then we would say, okay, we still got a potential, because it's probably, we're looking forward to maybe reject off of that continuation order block to keep up higher. Is this okay? Okay.
Yep. That's why we can't just say, hey, this sale is ready to go. You know, we can't really say it's ready to go, like for real, because we already know we got a point of interest right here that it might need to come to, you know. And we also know we got a 786 that it might need to come to too, which then in that case, if it comes to this, then we can say, hey, maybe we sell from here.
Right.
To
So
down to here.
So let me ask you a question. With that huge move up, and like you say, blowing through all those order blocks, and once it gets that high, you have to start thinking, well, it came all the way up here. It would make sense for it to come now and mitigate that daily fair value gap / order block even higher. Is that your thinking? You know, when you're looking at something like that, should that be the thinking?
And if I'm seeing it just coming all the way up like this,
right, like where it is right now, like yeah, it ran all the way up here. We got the 70 and above.
I mean,
it.
to be honest, at each one of these right here, I was looking for it to sell.
Right.
At each one, because in my thinking, we've made a bearish move to the downside. We left order block here, gap here. We left gap here, order block here. We left a gap here, order block here. We left a gap here. It don't look like it, but on a higher time frame is a gap here. We left order block. So for me, all I'm thinking in my head, just like everybody else was during this time frame that we made this move up, is at one of these points, we should sell off.
Right.
Right. Adding that into the fact that we had fundamentally, we had technical moves, from a technical standpoint, we had bearish everything. From a fundamental standpoint, we had bearish everything. Because during this move up, this is interest rate, this is Ukraine war, this is job numbers not reporting properly, this is gas going up, like all of this stuff at this point is saying this should have dropped, right?
Right.
Got bad earnings, like so much was saying that at this point we should have dropped. At this point we should have dropped. At this point we should have dropped. So at these areas, not even gonna lie, I had a hard time trading at these junctures right here. I took some L's or broke even at a lot of these points. And some of the points I made money, but I was 50-50 pretty much throughout this whole move up. Because again, I'm looking at this as we had nothing but bad news, technicals lining up with fundamentals to the downside, and we had an increase in the interest rate. So all I'm hearing is sell, you know. And as I'm getting to these levels, I'm seeing it is giving us the signal that, hey, it got to this high, we starting to sell off right here. But instead, they were using that as opportunities to buy. This is people in larger institutions, right?
Right.
Got to this order block. We got to the low right here, it sold. Got back to the low again, it tried to sell and then pushed right back up. The same way we were looking at it, everybody else was, because when it got to this same little level, selling tried to happen. And larger institutions understand that, and they just bought those and pushed us up even higher, right? We traded through this joint, got to the high, tried to sell one last time. It used the middle to push up to this one, right? Got to the low, tried to sell, it bought it, used it to buy it, and then it pushed up to this area. We traded straight through this order block, but then ran into this gap right here. And we don't really have no down movement throughout this whole time, except for here and now here. So, you know, it's like this kind of situation, you know, is not something you're doing wrong.
Mhm.
It's just you have to give way to price movement. You know, sometimes you can see everything the right way. You can have everything marked up the right way, lining up the right way. But at the end of the day, it's larger funds and a lot of money making this move happen. So you just have to set up your trade. And if it does what you think it's going to do, respond and react based off of what you know should happen, or what you should see based on probabilities. Based on probabilities, this should have sold here, here, and here, and here, or in the gaps, right? Based on probability, right? Because the probability says that if it comes to these areas, you should sell. If it doesn't, then you know that you had the right setup, you use news the right way, you use technicals the right way. It's just wasn't that time for that to happen.
Right. Cool. All right. So appreciate that.
It then like lower time frame,
Mm-hmm.
like you were saying, 70% entry. You know, once you at these levels, right? If you see, like, this was 29th, this happened on the 30th. Here's your entry situation.
Yeah, I'm glad you went down here, because this while you setting that up, if I may, you've said it many times. I've listened to it on your recorded videos when I play them back, which I do often. And I have to tell you, until Alfredo, something he said made it click, because it just clicked, and I'm like one of those hit myself upside the head V8 moment.
Mhm.
Because it's like, dang, why didn't you really see that before? I think it's because I'm, obviously still learning, and partially also being impatient.
Mhm.
Whereas you made it clear, you said it's the break of structure. Like it hit the order block leaves, it breaks the structure. You got to let it break that structure when it leaves,
Mhm.
and then return to the order
Mhm.
block. I'm like, you
Mhm.
said it's so clear. I'm like, and this is, when you did this, that's what's showing. So I just kind of wanted to,
Yeah.
yeah, man, that's good.
And I know on our Alfredo charts, he does something that I don't do. Let me delete this. And I need to do it just so I can remember myself. But he'll do this. We'll take a trend line right here. And I already have a template for this. I don't know why I don't do it. There's your breaker structure right here.
Right.
And you'll look at his charts, like watch this. Let's see. Fredo. We'll be talking all the time.
And the dude that you put me on with the videos, I can't think of his name right now. He was showing me in the video how he was doing it with that the New York Open with the 15-minute break of the high and low, and it breaks that structure. You know, I tried it a couple of times, you know, it was, you know, hit and miss. But when you see that same theory applied to the larger moves of the day, it's like spot on. It makes much more sense and consistency.
Yep. There we go. So this is one of Alfredo charts. And I'm showing y'all this because it just reiterates what I was saying. Here, BOS, breaker structure, right?
Mm-hmm.
This is implying that we have a change in direction, right?
Right.
And when we have that change in direction, prior to that change in direction, we had the order block in order to get us to change direction, right? So a lot of his setups and a lot of my setups, because we trade similar, is breaker structure, order block, fair value gap, here to here. There's your entry right here. He using basically the low of the fair value gap as his entry right here. This is the fair value gap low. This is the fair value gap high. Price came back down to the high, traded up and made a higher high right here. But if you know in this high right here is being made, you know that this high should take you lower so you can get into this gap right here to here. And either you're gonna trade, you're gonna take this low out and you're gonna hold in the middle, or you're gonna trade to the low of the order block, of the gap, or you're gonna trade to the order block. And all you're doing is, when you seeing this down move right here, is your first point of interest is here. I'm either, if I'm in the trade, I'm taking it at least to here for sure. And I'm hoping to take it to the middle of this or to this order block to take it back to the opposite direction if it's going in the same order, right?
Right.
If in this case over here, we got to break a structure. That means we got to shift in the change of direction, right?
Right.
Now, looking at this right here, this is where our high is over here, but this is where our new order block is right here.
Right.
That's where our breaker structure is right here. This is a bearish breaker structure. So that's why I got the minus BOS. That's a negative move to the downside. The first way you can look at this is, I'm gonna put my fibs here to this first time that it made a low right here.
Carl, let me ask you a question. So now, what do you could? Okay, I see where you consider that breaker structure. I got you. Never mind. Go ahead.
Right here.
Right.
And this is me, like, okay, I'm on the 15-minute, right? If I'm looking at 15-minute, let me pull it.
So let me ask you, why when you put your fib at that low of that breaker structure, why did you go further down to that low?
Right here, not right here, but here instead.
Yes.
Because I usually don't put my fibs on nothing lower than the 1 hour. So if I'm looking at this, right, on the 1 hour, during this time frame right here, I got equal lows right here. When I see those get taken out, the first low that's made is right here.
Okay, got you.
So, and then at this low, here's the bullish point of interest right here. This order block.
Right. Okay.
So it's leaving this structure right here. It gets to the first point of bullish point of interest that, hey, this could be coming back up. That's right here, right?
Right.
Once I see that's being done, this is where I'm drawing my fibs right here.
Gotcha. Okay, cool. Makes sense.
And
Gotcha.
after that, I'm waiting for this to happen right here.
RTO.
Yep, return the order block. And then after this happened, I'm looking to go from here. First target is 0.
Mhm.
Second target, -127. Third target, -618. Fourth target, the 100. And if it keep going and doing other things, I would already know that I would have hit 1, 2, 3, 4 areas on this setup. Then in this case, after this is done to 100, I can just adjust my fibs to here. Right?
Right.
Play this same move over again. Once we make this 0, once we make this 100 from the old move, right? The old move we just had, the 0 was here, right?
Mhm.
But price went all the way through the 100, right?
Right.
The next move I can take is this low to this high. And we can even got a pretty much a confirmation because this whole move right here, right? Come back 78, and then it give us the same thing again. From 78, 70, 618, and 50, we get 0, we get -27, we get -68, 618, and we get -100 out of all of this. If I wanted to, this is what I'm gonna look at again. So if I want to still be bearish, right? Price, if I still want to be bearish on this, right? 0, we pretty much got -27 right here off this wick. -618 is right around here. So we will be looking for that to come to 44.74, which line up with some basically this old this bullish order block still, this blue level. And then if it's going to go all the way down, here's the 100 at 44.36. This is a old bearish order block right here that is using, right? So we would have a lot of confirmation. Then if we want to just expand this, it's putting us here, but we would need a return first. We would need price from the 127 to return into this area, then get another move down. But for the most part, we pretty much mapped out everything. And even if we left the fibs here, right? Let's say we just use this, since this is where we are currently, right? This is where we at currently. This is the move we still in right here. Well, we a little extended, but with this move right here. But this is the move we currently looking at. If we just decide that, all right, cool, we're gonna be bullish, right? It's still telling us where it would go, right? Because if we break these highs right here, where are we coming to?
Back to that order block.
Back to the order block. Where is this order block? Is right by this a bearish order block that's right by the 78.6 on the daily, right here. This the daily 78.6. This an order block that's right by it. If we go to the daily, our short-term field levels are saying that the 161 is lining up about 40 pips away from the daily 786, right? I didn't even point this one out, but this is a continuation block that's right here at 786. This gap right here is where this is at right here. But right above that, here's the order block on the daily. The 200 put us right near the low of this daily order block, just shy of it, right?
Right.
Just shy of it. So the low of this daily order block is 72. That's 80 pips away from 80. 80 pips away from 80. That's not really that big of a difference between that. So, I mean, we could sit in 80 pips of drawdown just to take a trade sometimes, you know, because it's what is required. But you already know if it come back to 80 or 6 or 72, you need to be like eyeballing this area. If it come back around 4,700, key number, key level, middle of this order block, right around, give or take a couple pips. If it pushed through 80, this the middle of the order block right here. So that's right around 4,700. If you see any wick rejection right there, right here, or right here, you already know it might be time to go from there, you know. If it get above this, you know, right here, you got money sitting right here. You got a liquidity pool right here at this level. It might want to take this out, come to the yearly and drop from there.
All right. That'd be at the high of that fair value gap, right?
The high of it is right here.
Yeah.
At 47.77, lining up with the yearly. But the big thing about this is just seeing it all happen, seeing these levels and just being patient with it. And that's during this little time that I've been like taking off, you know, like that's one of the main things that I pretty much have learned out of all this is just being disciplined and being patient, because it never was really a lot of times where I was wrong about what I was thinking. Is just I wasn't being patient. I wasn't being disciplined. I wasn't following my own rules. And I was just letting the charts just be like, oh, this happening. You know, I'm gonna just take this. Nah, like just wait, you know.
Right.
Just wait. And even if you don't get it the first time, it's gonna happen after you, if you just wait and let everything happen how it's supposed to happen, you know.
Right. Yeah, the crust of it at the base of that was like probably a lot of what's called FOMO. The impatience coming from the FOMO. Right. Yeah, because I deal with that one. Like, okay, you do your back test and shows you wait till this happen and you miss it, you miss it. It's gonna be another one. The sun will rise again. Yeah,
Right.
that's one for me. Yeah.
And
Appreciate that,
especially
brother.
going through the challenges, right?
Right.
It make you kind of do it even more when you're going through the challenges, because you know you got to trade a certain amount of days, you know you got to do this, so you kind of like, man, I got to make sure I trade the 30 days, or I got to do it in 10 days, or whatever the case is you're thinking. But in reality, that messes you up, because while you over here focusing on, a trade you done jumped in too early or too late, you missing the actual setup. And your head is not even in the space to see, like, all right, this is still going up, but here's my rejection. I didn't got in this buy thinking like, oh, it's about to keep going up just because we got this wick rejection. When in reality, if you was not just looking at this wick rejection, like coming over here, if you let's say you jumped in right here and you buying it from here to here, you're not seeing that this actually setting up for the sale, right?
Right.
And it would have gave you this whole move where you buying this move right here, but you missing out on this move down here.
Right.
Because you thinking that, oh man, I just opened up my charts, I don't want to miss this buy because it's buying up, right? But this is only buying up to give you this sale right here that take you all the way down here. So yeah.
Cool.
Yeah, a lot of it is just trusting what you see, man. Like even now, if this stays bullish, and let's say this is for what I'm looking for the rest of the week, let me clear this stuff out. This staying bullish, and again, we on the daily. These are my points of interest that I'm focusing on moving into early next week, right? I still got this in mind. I'm not so much paying attention to it because we done traded through this already. So I'm still paying attention to it because this was a downside order block right here. I'm just gonna leave it alone for now because I'm just gonna keep that noted right here. I ain't gonna like consider the levels yet, but what I'm really paying attention to at this point is this. This is my gap, my fair value gap. This is my bullish order block right here. It's on the daily. So I got all my levels. This is my fair value gap right here. Here. That's the high. It's on the daily. We're going to the downside. It's my low. It's going to the downside. So now I know I got my high and my low right over here. And we already had our sale from here. And since we got to this point, This is my bearish point of interest. We went to the bullish point of interest. That's right here. If we don't hold this, we come back through to this, right? And then I'm gonna be looking right here. Right? Because that's my next point of interest right here. Because we not right there yet, I'm not gonna put no numbers on it yet. I'm just gonna wait. But once we get over here, these are the numbers I'm paying attention to. So for now, alert here. And in this alert, I'm gonna put something like into the daily order block. Wait for price to direction, whatever. Alert here. Set the expiration. That's Sunday, Monday. I'll leave that on there to Friday. That'll be my alert. So if price open up and it push down into here, I know I'm inside of this order block. And if it does that, then I need to see what happens here, here, and here. If I get upside, if I get rejection on the downside, I might be considering taking a buy from here or at one of these price points. If it just open up and it just push up, you can see it already, but I ain't really touching it until it gets to one of these levels, because that's a small gap right here. And there's 1, 2, 3 levels I need to consider that I'm not going to annotate yet. I'm just going to leave this right here. But I just know in the back of my mind that it could just be pushing up to this one of these levels right here just to go lower into this, right? So I'm just going to have this on the back of my mind, right? Or it could gap up through this and go into one of these, right? So I'm gonna put my alerts here, and I'm gonna put my alerts back here because this is the last time it sold. So it's gonna be here. Same thing, I'm gonna put it on to Friday. Crossing back into the daily FVG that it just sold from. Look for sell signal. If I don't get it, I'm just gonna leave it alone, and maybe I look for it to give me a buy inside of here somewhere. Maybe if it break above the middle, I buy it to this daily order block area. If it give me something like that, but for the most part, I'm looking for us to open up from here to push down into here, and we'll make a decision. If it does this and it holds, I know we go down to go up into here at least. That'll be what I would look for. If it goes down and it holds. at one of these levels. It's got a hole here, or it's got a hole here somewhere. If it pushes up, I'm gonna be looking at this level, but it may trade straight through this. But if not, I'm gonna be looking at, if it open up and push up to here on the short term, I'm gonna be looking at this little area right here. If it don't want to come back up, I'm gonna be looking in between here. And then I would look for it to maybe push down. So these are two scenarios that give me an up move. Right now, if we just open up and push straight up through this, then I'm looking at this. Same direction to here. But in this case, I'll be looking for it to take this out and go lower. Because now we inside of another order block right here. So at least I'm getting to the middle of this order block. And I'm looking for it to reject somewhere around here. Now, I could be all wrong on this. I already know that. And that's because, again, the fundamentals and the technicals are off right now. But just basing it off of technicals, one of these situations should play out. If we still bullish, we should open up, put down, hold this, go up. Or open up, push up into this little gap right here. Then push down, hold this inside of this order block and push up from there. If we still bullish. If we bearish, we immediately push down and maybe we push up into one of these areas still, and then we reject. Or we push back up inside of this gap that we got right here that we sold from. And maybe we go to the high. That's also another option. Maybe we go to the high and then we just reject from there. Because if they going up, they not leaving this liquidity right here. If they really gonna push it up, they're gonna push up into this order block and then into this little gap right here. But they're gonna want to come up here. So it just kind of depends. But either way, I'm watching these particular areas, these particular price points. And from that point on, I'm looking at my price action to confirm direction. And then I would take my setups from that. So I'm gonna drop this one too. So on that note, I think that's, we done went 3 hours. So I think we got enough for the day. More than enough for the day. And if you stayed on all this time, you are Definitely. Hope you got somebody with Daily, Lil,
Thank you, Corey.
Trees. Hope you got somebody with it.
Got a lot. Are you gonna be putting this video back out on Discord so we can watch it over again, just to dissect this information again?
Yeah, I'll drop it in there.
Okay, thank you.
All right. I'll drop it in there. Nah, don't call it a comeback. Don't call it a comeback. Yeah, man. It's gonna be clutch. I ain't even worried. I ain't worried at all. The video, let me get I'm gonna just drop it in there and that way. Okay. So peace out. See y'all